I always like to say that this industry is guilty of many self-inflicted wounds. And what I mean by that is that as I said, the Q2 22 issues around BlockFi, Celsius, FTX left a huge black mark on the investor landscape.
Right.
What has changed a bit now, you obviously have, Larry Fink out there, going on CNBC and talking about the laurels of Bitcoin. That's Bitcoin and that's an ETF. But then when you get below that, that's when you start to get into the difficult conversations.
Hey everyone, welcome to Talking Tokens, a podcast focused on interviewing the best crypto founders, market players, and up-and-coming startups that are changing the industry every single Tuesday and Thursday. I'm Jacquelyn Melanik, your award-nominated host and former senior crypto reporter turned entrepreneur, and I'm excited to be here with you all. Now, let's get into it. Today's guest is David Nage, a venture capital PM at Arca and the host of the Base Layer podcast. David, have you recorded an episode recently?
It's been a little difficult running a venture fund in this market, and then trying to do all of these amazing episodes has been a little trying. I did probably about 30 episodes in the beginning of the year, and then things have been a little bit more hard to do. So
I get it. I've listened to your podcast, but I wanted to make sure that we could shout it out as well as a thank you for coming on mine. For those who don't know, I've known David for a long time and he's invested across the space. David, do you want to give a little bit of an intro about yourself and how you kind of got into the crypto VC space?
Sure. So started around 2015, 2016. I was on the institutional side at a family office doing traditional venture. And one of the younger family members informed us that he had given some money to one of his friends, and one of his friends happened to be one of the first Bitcoin fund managers. And so upon realizing this, that we had Bitcoin exposure around the time of the Silk Road arrests and the DAO hack, I wound up spending 6 months of my life, basically going down the proverbial rabbit hole of talking to people in the community, studying, reading all of the academic research about things like ring signatures and asymmetric encryption. I did not have a CS background from college. And so I actually, on my off hours at night and weekends, I actually taught myself how to code. So I did a full stack all the way through Python. Now, I do not ascribe to be a developer. I felt it was very, akin to, if I'm going to be working in a part of the world where they speak a language, maybe if I was going to Greece, of all places, it's not a terrible place to be, I would probably want to learn some Greek so I could get around and not always try to force people to take my language. So that was the thought process behind it. Especially with the advent of smart contracts on Ethereum, I realized that there was a world that was bigger than just Bitcoin, that programmability of smart contracts, of if-then statements, had the ability to touch many different facets of our society, whether it's economic, social, you name it. And so we tried to invest as much as I could, for a few years in the institutional seat I was in. By 2018, so much of my deal flow started to be around blockchain and crypto that I really started to want to try to move into that space. In Q3, around Q3 of 2018, a lot of the conferences were happening around that time. And, it was Consensus. It was a lot of the other ones out there. And they were so expensive. For a family office, person like me, it would be like $3,000 to attend.
That's crazy.
For speakers, it would be like $30,000, $40,000
to get your slot, right?
Yeah, to get a And I was like, whoa, wait a second. If I'm spending all this money and they're spending all this money, they're going to try to get something out of that. It becomes more of a sales thing instead of like, hey, this is new emerging technology. We have to teach everyone about this. I need to get something out of it. And so I put it out on Twitter in 2018. I was like, no one's learning anything from this. Everyone's just like trying to sell each other. I was like, if someone can do this for free, and I was like, I'll do it for free. Let's just get a bunch of great people involved and let's just teach people what's happening here. And that's kind of what created FO256 back in 2018. We did it in September, totally free. No one paid anything to attend. We had people like Ariana Simpson before she went to Andreessen. We had Ken Seif at Blockchain Ventures. We had Mike Maples Jr. from Floodgate. Pompliano. We had Travis Kling. All these names that now are obviously garden variety. Everyone knows them. And it was amazing. And so right after that event, I was like, okay, this is where I got to spend my career, my career dollars, if you will. And so I decided to take garden leave and just basically put in my time. And I went out and met with a bunch of other, new funds at the time. It was a bit chaotic. At the time, there wasn't a lot of process to invest in this space in terms of ideation and risk management. The tooling around it was very, very nascent, to be nice. And so upon that, I started the podcast, as you alluded to. I started Base Layer at the same time because for the institutional investors out there, and at the time when I was in the family office world, there were 10,000 family offices around the world. And here in the United States, there's about $70 trillion that's transferring from generation to generation. It's called the big generation, kind of wealth transfer. And so I can't be at all the family office luncheons. There's usually every week there's luncheons with family offices that are talking about deal flow. I can't be everywhere at the same time. And so the idea came to me is like, why not just create a podcast that tried to really break down crypto, demystify it, if you will, make it in the complex into something that is subtle, that people can kind of like bite into. And that was why I started Base Layer. And as you alluded to, 260 episodes later, 21 million something listens throughout the years. We've had amazing founders. Anatoly was my third guest on December 12th of 2018.
That's wild.
Thinking back on that, it's just crazy. It's like, it's mind blowing to see what's happened with Solana at that time. And so that was how I kind of did those two things. And then with Arca, basically I started to use Twitter and I started to use a lot of kind of like public facing to build my profile. And when I was talking to a lot of funds, a lot of other investors, the guys from Arca reached out to me and they had just started the firm. And they started to show me some of the things that they were doing from a risk management perspective and from a correlation perspective. Now they were investing in the liquid market at the time. And when I saw the level of detail about, you're actually doing correlation analyses, with crypto and other assets, I was really amazed because he wasn't seeing that level of detail at the time. So I met the guys in Los Angeles and was really just taken with the professionalism of the firm and of the people there, and I joined shortly thereafter. I think I was flying back to Los Angeles and I typed an email to them and I'm like, I'm ready to come on if you guys are.
That was it. Amazing.
That's 6 years ago almost, to the date. And, with Arca, we are a registered investment advisor. We have 3 funds at the firm. And so the first fund has been, our liquid digital asset fund, where we've been investing on the liquid side of the spectrum. We've done amazing work there, being early to themes like DeFi, where we expressed a lot of interest there. Gaming was very important for us too. We were one of the early, investors in Axie. And so what I noticed is that with a lot of the liquid investments, I started to see that there was a whole gap between, funding and then all of a sudden a liquid token. And I said, why don't we go earlier and support founders earlier? And that was always aspirational anyway, from my side. And so at the end of 21, we launched our venture fund, which I've been running now every day. And in that venture fund, we've been doing pre-seed, seed, and Series A. We're a little close to about 60 companies in the portfolio now, spread across a few themes and sectors, which I'm happy to talk about more, at length.
We'll get into that. Sure.
But yeah, it's been an adventure.
Yeah, 100%. I'm curious on the front of the VC landscape. You've been in the space for a number of years. From 2021, maybe, since that fund launched, how do you think it's kind of evolved and shifted over time?
The VC landscape shifting from that to there. Wow, that's
that market cycle to this market cycle, and maybe the one in between. I mean, we obviously had like a very chaotic time between 2021 to now. But so from your perspective,
it's actually relevant because I've been talking to a lot of founders, recently about what's happened over the last few quarters as it relates to 21. So that's actually it relates a lot. So 21 from a venture perspective, I'll start with the funding mechanisms. Mostly the funding mechanisms at the time were SAFs, simple agreements for future tokens. It was an adaptation of what Y Combinator had created years ago called the SAFE, the simple agreement for future equity. And so a lot of the deals, I'd say a large majority of the deals at the time were SAFs. There was a big focus on tokens. There was a big focus on IDOs, initial DEX offerings. There were launch pads where tokens were going out there and launching their tokens, out in the wild. And then what we started to notice around December of 21 was that the appetite started to depress for tokens, and especially these new IDOs, as relates to gaming and some of the other things that were happening there. And then as you started to pour into 22, what really changed the venture landscape was, the happenings of Luna, BlockFi, Celsius, and FTX. In Q2 into Q3 of 22, the funding mechanisms changed dramatically to SAFEs, simple agreements for future equities, plus a warrant associated with that. Now, a warrant was basically, a call option if and ever in the future that, the things in the regulatory side change for the better, there's more clarity, then we can actually launch a token into the market as well, and decentralize the protocol and or the project. And so that really was a very large shift for the funding mechanisms out there. And what you've seen as a correlation to that is that people have been talking about there hasn't been new token issuance over the last year and a half or so. That's why. That all changed in Q2 of 22. The entire funding mechanisms change and the dynamics of that. And that also obviously, pours into the regulatory things that have happened because of FTX, because of some of the things that we've seen in the market. So that was one thing. The second thing that happened is that in 21 into 22, the funding for funds, new funds especially, was fairly healthy still. Again, what happened after Luna, BlockFi, Celsius, et cetera, the funding for new funds, for follow-on funds, if you went from Fund 2 to Fund 3 or Fund 1 to Fund 2, the funding started to compress. This was also in correspondence to what happened here in the United States with the kind of the reversal from quantitative easing to quantitative tightening. You saw a few things happen too in terms of risk-free rate. The risk-free rate all of a sudden went beyond 5%. And so, whereas, investors could start talking about the laurels of DeFi, providing 7 to 10%, APYs, which then obviously started to compress because of the events that happened in Q2 of 22. All of a sudden, DeFi became a little less sexy. And then the risk-free rate in the bond market, especially in the United States, started to become very interesting. And so if people are following along with this has then been the birth of things like Superstate and some of the other projects out there that have been tokenizing the treasuries out there in the market. That became a big thing over the last year and a half. So again, a lot of this dates back. You have to have, I always tell people, when they're like, what's going on with the market? You have to have perspective. You have to see what's happened over the last few years that have created the situations that have been present today. And so, there's definitely been, the second part, as I said, the funding of new funds has been compressed and has been depressed, which has, kind of changed the landscape, today versus, back in 22 into 23. If you look at the numbers, 22, as a landscape, we saw roughly about $32 billion allocated into the market. In 23, we saw roughly about 30 billion allocated into the market. And then, actually, let me date back. 21 was about 33. 22 was about 30. 23 last year was actually quite bad. It was about 12 billion. And so you started to see this massive decline from 21 to 22 to 23. And for those that are listening, I have a bad cold here, so I didn't know what year it was. I thought it was 25 and it was actually
it's okay.
So I apologize.
We'll let it pass. It's a tough week.
So 21 into 22, you saw roughly 60 billion into the market. 23 was a bad year. It was about 12 billion allocated into the market. And this also corresponded with funds trying to raise new funds.
Right.
And so what's happened, so people can understand, if I raised $100 million as a fund, and say I did that, 3 years ago, right now I'm probably looking at the last tranche of capital, and I've been trying in the market for the last, call it 6 to 9 months, going out around the world, going to Dubai, going to all places that actually have allocators and trying to raise a new fund.
Right.
Now, if I'm not necessarily having a lot of success with that, and I have a little bit of capital left, things become much tighter in terms of allocations. And people have been wondering why in 2024, why the market has been that much slower. This year we've seen in Q1, we saw about $2.7 billion allocated. Most of that was in March, by the way. That was about $1.6 billion. Same thing in Q2, roughly around the same kind of trajectory. Probably around the same, in Q3. I think we're trying to wrap up those numbers now. So I was saying that we're probably going to see another, $10 to $12 billion mark into 24. And again, it's because, the capital coming into the market, injected into the market, has been slower than we've seen in 21 and 22. So aside from, that, the last things, the number 3 mark. So you talked about, as I said, the differences in the mechanisms. And then we talked about kind of raising new funds in this environment. The third thing is the regulatory side. Mm-hmm. This is obviously the 800-pound gorilla on the market right now.
We talked about it a lot for sure. Yeah.
We'll unpack a few things here.
Yeah. I think at the front of the capital allocators, you would know better than me or maybe our listeners. What are the conversations with them like? Are they pulling back in the sense that they're no longer interested, or maybe they just don't have the funds to deploy into a fund? Can you walk us through why you think that number is declining?
I always like to say that this industry is guilty of many self-inflicted wounds. And what I mean by that is that as I said, the Q2 22 issues around BlockFi, Celsius, FTX left a huge black mark on the investor landscape. Right. What has changed a bit now, you obviously have, Larry Fink out there, going on CNBC and talking about the laurels of Bitcoin. That's Bitcoin, and that's an ETF. So yes, investors are more excited, or at least a little bit more willing to take on Bitcoin exposure at this time, because they can do it through, BlackRock. They can do it through IBIT or Fidelity. These are institutions that they know. When it starts getting into, okay, well, what's after Bitcoin? Then you have the Ethereum conversation. And I think, our firm has made a very big case that, Ethereum is very similar to like the App Store in, iOS or, Android, where you have all these new applications that are being built on top of it. Solana also is something that, I would say the institutional investors know about. They've heard a lot about it from the press and the media. But then when you get below that, that's when you start to get into the kind of the difficult conversations. Mm-hmm. Why do some of these other blockchains exist? What is their value proposition? What is the things that, are exciting for us, thinking 5, 10, 15 years out? And so you have to really make, your case is very strong for that. Does Avalanche, exist because they have made a very big pathway into TradeFi and gaming? They are doing that. Right. But, why does, EOS exist? Why does, some of the other ones like Cardano and, if the armies start to attack me for that, tell me why you exist. These are the things that we need, we on the front lines have to tell people why these things exist. And it can't just be because of religion. A lot of blockchains out there rely on religion instead of actually execution. There are a few out there, obviously, that are executing, that are providing value, that are actually creating meaningful partnerships, and are driving value to the overall ecosystem. There are ones that are not. And so, when you're on the front lines, you have to explain to people why these things exist. I think another thing in terms of talking to investors right now is we're getting to a point where it's less infra and more consumer applications. I can now go on my phone when I'm talking to a potential LP and show them things like Farcaster, mm-hmm. show them things like a Dracula app, show them things out there that actually are using blockchain infrastructure to deliver a meaningful user experience.
Do they care for these things though? Like when you show them these applications, do they understand it and they're like, oh yeah, that's smart? Or they kind of think, what's the point?
Yeah, they understand, like, full and fair disclosure, one of the investments that we made is into a company called Overlay. They actually have an application that you can upload your photos that you take from your phone, and then put them on a blockchain to lock in the provenance of that. So when you're actually putting them online, you can say, yes, this is human generated versus this is an AI bot that generated this image, and show the provenance difference there. And you can show them that right on your phone, and you can show them how it works. And you can show them how it basically distills it into a blockchain, into a ledger, and it takes a snapshot of that. Showing them instead of telling them,
100%. Way more
is meaningful.
Yeah.
It becomes, what I always like to say, it becomes from the theoretical to the practical. I think there is the big shift in this market right now, is that we're really going from the theoretical to the practical. And so aside from talking to them about why other things from Bitcoin exist and their usefulness and their purposefulness, it is also that kind of same approach. So that is, I think, a very big change in kind of the discussions that we have with investors right now.
Mm-hmm. You also talked about earlier about the appetite for tokens was down. Do you think it's one, back, or two, coming back, especially in the current market that we're in, where there's a lot of TGEs, pre-TGE, and also just like a proliferation of tokens across the board? Whether or not those are valuable, that's up for discussion. But I'm curious from your perspective, especially on the VC landscape.
At the end of the day, why I and many of us came here is because there was a narrative back in 2015 and 2016. I think Novogratz actually said this a lot too back in the day, if I remember. If you look back into like Uber and to Airbnb, Uber drivers, before they went public, were creating the value of the network. They were waking up early in the morning. They were driving at midnight.
Right.
They were delivering the value of the network. That's why Uber became so valuable, is because of them. When Uber went public, they didn't get shares in the company. They didn't get any kind of compensation for that. They didn't get any part of that network value that they created. Airbnb, the same thing. If you have an Airbnb, you clean it, you have all the nice towels, the nice soaps, mm-hmm. You create a nice, kind of spa-like experience. When Airbnb went public, you saw nothing. You get paid for it, obviously, because people are using it, but you saw nothing from that actually happening. And so that ethos right there was a huge reason why so many of us saw that the system here, the Web2 system, was broken, because you continue to have, those that are driving the value of the networks receiving no incentive at all, whereas a digital asset had the ability to do that. And so at the very core of the ethos, yes, a digital asset, especially new tokens that are coming to market, should theoretically have a real reason of value. What has happened is that for the last few years, many of the participants in the industry have tried to jam tokens into projects that probably shouldn't have a token. Part and parcel, for things like governance. We're creating a token for governance. Okay, how many people actually want to participate?
Voters
in
don't need a token. Yeah, they could just vote.
Right. How many people want to participate in governance? And if you look at the governance participation levels, they're fairly de minimis. Mm-hmm. And so that really doesn't, excite people. But if you are creating, as I said, a network, and the participants of those networks that are doing the actual, creation of the value of the network are incentivized with, tokenomic design, that's meaningful. Same with NFTs. It's great to have PFPs. They're fun. It was kind of like the first level of, the web back in the day when we had AOL Instant Message, when,
mm-hmm.
We just sent, kind of quick little
icons. Yeah,
exactly. Yeah. That was the first level. No one, at the time thought, oh, crap,
But my icon wasn't worth anything. It was worth nothing. And some of these NFTs are also worth nothing, but some are worth something. Right. Yeah.
But we have to pull away from it, as that at the time, we did not think that billions and trillions of dollars of commerce were going to be done over this mechanism.
Yeah, no.
It wasn't something that any of us at the time thought. And so very similar to that is that the NFT, very similar to a digital asset, many people have associated with just, a Bored Ape. And if you look at what the actual technology can provide, is that it's a wrapper for all intellectual property. It is a wrapper that allows for dynamicism of actually delivering, very similar to like software on your devices or your phones or your desktops, where it gives you things that, right now there aren't really other mechanisms to do. Also with the way that, things are happening with privacy and GDPR, the NFT has the ability to become the new internet cookie, where you can store all of your data, you can own it. And then you can create a profile, which is basically, kind of interconnected and interoperable with the entire experience that you have online. These are things that people, we get trapped into. I saw Vitalik talking more about meme coins today. We get trapped into these little things where we just, hyper focus on meme coins, or we hyper focus on, this NFT project, or hyper focus on this, new token that just launched like Eigen, last week. You have to pull away. And this is the beautiful thing about being a venture investor, which I have come to appreciate, is that there's so much information that comes to us on a daily and a weekly basis, where if you can pull away and kind of synthesize it and kind of really start to think about how this is going to work out possibly in the next 5, 10, 15 years, that is something that I think is for all of you, everyone listening, try to do that. Try to do that maybe once a month, maybe try to do that, once a quarter, whatever you can do, but really try to, take all the different signals, all the different pieces of noise, and just try to take some time, maybe an hour, and just go for a walk. I try to do this every day too. Go for a walk and just say, okay, these are all the inputs that are coming in. How does that look in a very large kind of landscape going forward? How does this affect different pieces of our life?
Right. I'm laughing because it's true. You should just go for a walk, and you should also look at it more holistically. But something I think about a lot is, how do you get people to think more long term? Across the industry, we always joke like every day and every week feels like a lifetime, and a quarter is like 5 years. And when I ask someone like, oh, what do you think will happen next year? They're like, oh, well, that's a really long time. And it's like an ongoing joke, but it's also kind of true. From your perspective, and I think this is a valuable one, because VCs do have to, zoom out and look at the bigger picture and have a longer horizon. How do you advise, or how would you advise listeners or people who are not investors on that level to kind of take a more long-term point of view?
Right. And this is the fun part of the show, where I say everything I say here is not financial advice. If you want to take a look into that, talk to your financial advisor, talk to your investment. For my perspective, as I said, again, we are bombarded with inputs every day, especially when it comes to crypto. We are bombarded with a price of an asset that is the largest asset in the entire industry, with Bitcoin and with ETH and Solana and the other ones. Every day we're bombarded with, price go up, price go down. And so it is one of the more interesting aspects, because, like AI doesn't necessarily have that. AI, ChatGPT just celebrated 200 million users, over the summer. And there, obviously there are associated, stocks that are, focused on AI,
right?
But it doesn't have that direct correlation, with, there is no ChatGPT stock symbol right now. And so, obviously OpenAI just raised another round at $160 billion, and which was just, that's amazing, because it's just, wow. We could talk about that later, but that it's, there is not that direct correlation. And so digital assets, crypto, blockchain, whatever you call it out there, is one of the few places in the world where so much of the daily sentiment is driven by, the price action of a few liquid assets in the space.
Yeah.
And so for, an investor like me and other VCs out there too, we watch that, we monitor that, but that is not something that is necessarily going to be the core focus of my day-to-day. My core focus of the day-to-day is to remove the emotion of that market and to really look at what, the technology is starting to come to fruition to. For instance, intent and resolvers. Not a lot of people talk about it. In the industry, with the VCs out there, we do talk about it. What is an intent and resolver? This has been kind of, figured out over the last year. It's, basically, you write something on a platform and you say, I want to transfer 10 ETH to X amount of USDC. and you basically just hit enter. And in the background, you have something called a resolver, which is basically looking at all the different liquidity pools, looking at, centralized exchanges, decentralized exchanges, looking at, any kind of liquidity pools out there. And basically what it's supposed to do is, spit out the best bid and ask, the lowest slippage, the lowest cost, result to you. So you have to do nothing. You have to know nothing about how to do any of that at all.
Mm-hmm.
That is what we're talking about now. And it's very DeFi focused. Imagine, again, this is where, again, you have to take what's happening today and kind of abstract it out. Imagine I want to just search for anything within crypto at all. I want to, find some sort of NFT that lets me potentially own a part of a Major League Baseball team. And the resolver in the background is basically looking quickly through all the different indexes, all the different repositories of data, and comes out with an answer for me. Very similar to ChatGPT, where you basically type in something in ChatGPT and you say, I want to do this, and it basically spits out a whole recipe on how to do that. That's where this is going. And so, again, the daily price action's happening here. The technology is happening here, but then you have to take it, where it can go, if all things go into accordance of plan. And so that's, one of the distinguishing factors, of what we do here on the VC side. That is, very different than, say, someone who's trading tokens every day.
Mm-hmm. Do you feel like there are certain aspects as an investor that people aren't really looking long term and they're maybe just buying into the hype? I feel like there's a few sectors right now, but one of the biggest ones is crypto AI. And I feel like if a company just puts AI in it, they will probably get investors. You know what I mean? But there is also valuable AI projects.
Let's pull that thread.
Go ahead, challenge me.
One of the most interesting areas in crypto and AI, in my opinion, is that if you look at what's, there's been analysis of this, is that LLMs, Midjourney, Stable Diffusion, Chat, whatever it may be, LLMs in theory are going to run out of human trainable data by somewhere around 2026, which, if you look at your calendar right now, is roughly about a year from now.
Yes.
This is really interesting because if you believe that AI agents and AI bots are going to continue to be more immersed into your day-to-day life. If you go on Amazon, for instance, and you have a issue with something that you just got in the mail, you're going to be encountering an AI bot that's going to be trying to talk you through this and figure out how to make a solution there. If you're if you have a healthcare issue and you reach out to your healthcare provider, probably going to be dealing with an AI bot on the first level there before it goes to a human. Yeah, this is how things are all going. And the answers that they provide, you can tell, are very bottish. They're very kind of robotic. And so the idea is that, LLMs are supposed to be able to pull more data, more trainable data, and make them better. And so this is an area that I think interplays very well with crypto because, again, you and I and everyone listening there has experiences, has relatable knowledge that can be used by these AI agents, these LLMs, to make them better, more performant. However, I don't want to give that for free.
I was just going to say, they're going to have to request that opposed to just like gathering our information.
Right. And so, one of the projects that we recently just, and, again, full disclosure investor, calling it out, is a project called Newcoin, where, for the kind of the luxury consumer side, they created an app basically that says, okay, here's a bunch of dresses that were created by an AI agent. Which ones of them do you like, right now? And you just literally swipe right and swipe right. You could do 100 of these in 2 minutes. And it's for, new, outfits, new shirts, new dresses, new bags, etc. All of that then is then used to train the LLM that then goes to Louis Vuitton, to Prada, to all the luxury houses that are trying to figure out what the hell are we going to make in the next 12 to 24 months? What are the new trends out there in the consumer side?
Want. Yeah, that's super interesting. Huh.
And so, again, you're going to be incentivized because Newcoin is obviously a digital asset company and it basically is going to have a digital asset that incentivizes you for that behavior. So that, I think, is, AI. And that's just one instance. There's a lot of instances around that. AI definitely, I believe, is true. The other area that is true is deepen. I'm sure you've had a lot of deepen, talk on the show recently too. The interesting here is that if I go 3 blocks that way, I'm going to hit a dead zone for 1.5 miles where this conversation can actually happen. We're in 2024. Some of the stats here in the United States, there's 120 million people in the United States that don't have access to broadband speed. 120 million out of a population of roughly 350 million. That's school kids that can't do their homework at home. That's just mind-boggling to me as a parent. And so what's happened is that you have 3 of the largest companies in the telco space, AT&T, Verizon, and T-Mobile, happen to be some of the most indebted companies in the world. And so if you look at, there's some analysis here, we need about 800,000 small cell antennas throughout the United States to kind of create a more robust network to kind of start taking care of that 120 million number and bringing it down. But they're not spending it on that. And so that's where deepen is really unique, is that there's actually a supply issue and a demand issue where it meets together, and the technology actually has the ability to create these networks and to allow people like you and I who have, a Wi-Fi router where we can partition it and actually allow someone else to, jump onto it, for, a little bit of a monthly payment. This is where digital assets actually come into play. I think there are hype, kind of conversations, especially on social when it comes to AI and to deepen to others. But if you kind of start peeling away, there are actual reasons why they exist. Yeah.
I actually have a helium router. So that reminds me of that in the sense that I'm providing, I guess, cell service, and in exchange, I get what could have been a lot, but now is a nominal amount of rewards every time someone connects to my router. That's a very watered down version of what it is.
Here's the thing though, and here's where deepen really explodes in my opinion, is that most people have had to buy those routers or buy those nodes. And those can cost $200, $300, or even $500.
Mine was $500. I'm just being honest.
But you did it because you're one of the most inquisitive people in the space who has been an amazing journalist over the last,
David, that is
years.
Too kind. Thank you.
No, I say that because your inquisition and your curiosity around this makes you a far superior journalist in the space than anybody else. Whereas others just kind of read things and kind of take them for granted. You were actually testing them.
100% you have to. Yeah.
You spent the money to test it. The reason why I think we're having some problems on the kind of, the supply side, which is all of us, we all have the supply, meaning the demand, is that if you look at, the traditional telco players, they'll pay a building landlord up to $5,000 a month to host one of their antennas to provide Wi-Fi services around a 2-mile radius or a mile radius. They'll pay them to do that. So there's the idea of subsidies. With this, we, over the last few years, like Helium and others, we have said, oh, you want to actually help us build these decentralized networks? Okay, we'll buy this thing. Not everyone has that disposable income necessarily to say, okay, I can just drop $300, $400 on this thing and,
and hope it brings any return too. Because obviously people have some financial drive on that front, but yes.
Exactly. So we need to flip the switch. We need to, flip that script where we have leasing programs, for instance, where you can lease these things. You don't have to spend the $500 right up front. You can lease them. And then there's a payback period. Obviously you're operating the network, the node. So there are things mechanically I think we need to do over the next year or two to really make these things much more sustainable.
Well, if you're a project out there listening or someone that wants to create a project in the deepen space, I think that's super valuable. It's a really good point. Why are we paying them to help them build their network aside from the belief in the system? I don't know.
Yeah.
So that's a good point. Okay. What other sectors or themes are you really interested in right now that you think we should all pay attention to that we haven't discussed already?
Yeah, I would say another area that, we are very keen on, going back to the NFT side of things, is that intellectual property. We've had a few conversations with large corporates, I won't name them, but they produce sneakers and other apparel.
Okay.
The way that they protect their digitized IP, and they've got lots of it now, is in quote unquote, we have a cadre, a huge amount of lawyers that put out cease and desist orders to people that are infringing on their IP. This is not, as we just talked about, this is not in correlation to what's happening with the proliferation of LLMs. I can go to Midjourney and I can say, put Bugs Bunny in a pair of sneakers that's dunking, in Madison Square Garden. Mm-hmm. And it may not be a pair of Reeboks or Nikes or Adidas. It could be something that looks like it, but it's probably going to look like it's infringing on the IP. This, I think, is really interesting, is that, again, the NFT has the ability to lock in that digitized IP, on a publicly exposed blockchain where everyone can see it. It's immutable, can't be changed.
The lawyers can't come forward.
Lock in that provenance, and basically, kind of do away with, the old standard of we'll just have lawyers basically fighting all these battles. I think if you look at the number of images that Midjourney and Stable Diffusion, it's in the hundreds of millions, if not billions, of images that have already been created off of these things. I think the number is astronomical. This, the ability to battle that needs to be updated with a new playbook. And that's why we think that, IP management, especially with what's happening in this world, is so incredibly important. Again, full disclosure, we're investors in the company. Spaceport is at the forefront of this. Yeah. Is at the forefront of this. There are other players in the space too, but it's out there. It's public knowledge. They just signed a deal with Toei Animation, which is one of Japan's largest animation studios. They've worked with Roblox. They've worked with Fortnite. Why I'm bringing this up is that this is a real use case of blockchains. This is a real use case of NFTs. It's not just, experiential. Now, PubKey is great. Obviously you have to have, your key to get in there, and, hang out with
PubKey's in New York City, Bitcoin themed bar for those who don't know. Yes.
Right.
Go on.
Awesome. Experiential. Very cool. Being a community, and there's other use cases where you can create those kind of, experiences at bars and clubs and everything like that. That's great. But when we're trying to also bring in those Web 2 companies, and give them reasons to use the technology that's been building out for the last 4 or 5 years, this is a real use case. This is a real thing. Mm-hmm. And so, besides that, there's also a kind of a conversation with DeSci. We haven't done anything in DeSci. I know others have, but it is interesting. It's something that we continue to monitor. Molecule, a company in Europe, was one of the first out there to create something called the IP NFT, whereas effectively the idea is that researchers in labs around the world, any moment in time, come up with scientific discoveries. It could be on, new drug development, immunology, et cetera, et cetera. And the processes of going through IP, kind of management of that are very, very expensive and time consumptive. And so if you have the ability to effectively mint an NFT at the time of the, discovery, you have something that could be used going forward. And that's why Pfizer and some of the other larger pharmaceutical companies are also paying attention to this as well. Mm-hmm. And so I think that's another, an area that doesn't get a lot of attention, is the idea of the NFT expanding beyond just the idea of collectibles into something that is very resourceful for Web 2 companies to really take this seriously. Yeah,
no, I agree 100%. I've been saying this for a while now, ever since NFTs became popular. I think outside of the Web3 worlds, a lot of people look at them and scoff. But if we actually created real use cases for them, in the sense that, hey, it proves I've been a fan of this band for this many years, and now I get special access to concert perks, or, oh, I have this luxury bag and I could prove that it is actually that, even though it's a vintage, or like you said, things about healthcare, et cetera, your mortgage, it all makes sense, and yet we're not there yet. So I do think there's a lot to come on that front. Before we wrap things up, David, I wanted to ask you, what do you look for in a founder? What makes a good founder to you? I know in the beginning you talked about how you learned how to code so you can understand the technical language, which maybe you like technical founders, maybe you don't mind if they're non-technical. When you're talking to someone, what are some, maybe let's say like 3 key things that you look for in them? And maybe 2 or 3 things that you're like, oh, I'm not so sure about that. And obviously these things are all, variable, etc. But I'm curious.
Yeah. We actually have a process with that. We started a few years ago. Now we don't make them do like a 16 personalities test.
See if you're compatible.
We have, although, ask them similar things in there. We want to get a sense of their personality. Are they the type that's going to be coachable? Meaning, do they want to be coachable, or coached, or do they not want to be coached? Do they want to be left alone? We've got 60 some odd companies in the portfolio, and I could say there's a handful of them that want to just be left alone. And we can respect that. That's fine. But then there are others who are like, yeah, I want to talk. You want to, let's talk, 5, 10, 15 minutes every month to, catch up, let's keep things, on par. So that is, the personality is incredibly important. One of the things that we also look for is, what we define as kind of like EQ. What is their knowledge of where they are in time and space, if you will. I think Naval always says to be present. And, I don't know if we're necessarily, kind of synthesizing what Naval has been teaching, but I'd say being present and being understanding of where you are in time and space is really important. This can relate to things like valuation. In Q2 of this year, there were founders out there that were taking all of the kind of the Bitcoin ETF FOMO, all of the ETH Denver FOMO, the Bitcoin L2 FOMO, and all of a sudden they thought that the market was going to be pricing their seed rounds at 2021 levels, where things were pricing at a seed level of like $40 to $50 million post-money valuation.
Didn't happen.
No.
I didn't think so.
They wound up being out in the market for, 6 months because they weren't aware of time and space. They just were taking the immediate impact and not looking at the kind of the whole picture. So that's really important too, is just the ability to kind of look around and see how things are working around you. There are VCs out there that want founders just to be in a bubble. I prefer that not to be the case. I prefer you to be executing and, working on your vision, but I want you to be aware of where you are in time and space. I think that's important. And I'd say, another thing too is, who do you surround yourself with? We joke about this. We always say this, and it always gets to be a laughing matter for a minute or so. But if I have 2 co-founders on a call, I always ask them, if you were in a burning building, would he go get you or she go get you? And they always laugh about it. There's always a smile on their face.
Do they say yes? You would hope.
Well, yeah, obviously.
Right.
If they say no, then we can probably stop the call right there because we have a significant problem.
Yeah.
But why I ask that is twofold. One, building a startup is one of the hardest things in the world. You know this because you're doing it yourself.
Yep.
It is one of the hardest things in the world because the buck stops with you. It's you. It's all on you. To see the vision through, to execute, and to take what you have here and kind of put it out there into the world. That is one of the hardest things in the world to do, bar none. But then you're adding, the kind of the addition of crypto. You're also doing things in crypto. And you have people here in the United States specifically who want to see the end of this industry very badly. Building, armies against us, if you will. So you're adding a second layer of complexity and difficulty to your life. Now, we have seen this play out where, very experienced, founding group, decade plus years of experience, where over the last year and a half of the consistent negativity, of the regulators, the senators, the press on the space started to affect their families, and their families started asking them, like, what the hell are you doing this? Mm-hmm. And so they wanted to kind of pivot out and go to AI. These are lessons that, we learn after, a few years of doing this, that there are some who just don't have the stomach for it. And so when when we're talking to founders, this is something that's incredibly important for us is, why are you here? Why are you doing this? What is the real, are you,
I can tell a lot about a person, right?
Is it because you're willing to fight, or is it because you think this is where you're going to be able to raise a lot of money really quickly? That takes a little time to figure out, but that's really important for us.
Do you feel like you read people pretty well?
I try. I try to give, the benefit of doubts. When I try to look at my biases, we all have biases. If you don't think you have a bias, then you have a bias right there. So we all have biases. And I tried to, over the years of my life, I've tried to put my biases, under review as much as I possibly can. Am I looking at this, with a lens that is clear, or are there, is there clouds there that I've put there? I also have the benefit of working, in our investment committees with, 3 or 4 other people within the firm who, I always like to say, whenever we bring something up, it's basically us standing on a mountain and they just throw rocks at us. And, if we don't fall down, then we typically, are able to try to move this forward. So I have the ability and luck to be able to work with some great people who, try to put those biases, those sentiments into check. So yeah, I'd say it is a very, it is a process. It is something that, again, I've been very lucky to be a part of. To be able to be a small part of the fabric of building this industry has been something that has been probably one of the most enjoyable things in my professional career.
100%. I agree with you on that. David, can you leave us with a piece of advice, something you've carried with you throughout your time in this space? I'm sure you've got some good ones, but.
Do your best not to be emotional. It is a very emotional industry. Chaos does not do well with chaos. If there is a chaotic period of time, don't meet it with chaos.
Don't add to the fire.
Meet it with calmness. Meet it with compassion. And then it's a very big cliche, but as a parent too, you can only control what you can control. And I know everyone says that, and it's a big cliche, but when you really look at things, there are only so many things that you can control. If you're a founder out there and you're building something and you have, regulators and, policymakers that are trying to do things, I understand you're going to be upset. I understand that it's going to be difficult to kind of stomach that, but keep building, keep doing what you can do, keep building what you can control. And try not to get consumed with things that are outside of that.
I always say control what you can, embrace what you can't.
I like that.
I agree with you on all that. David, thank you for coming on the show. This was so fun. We're going to have you back on again.
I look forward to it.